make predictions. Everyone says I'm predicting this and that. All I'm doing is reading the value of a particular model that I have that continually tracks the price over its entire history. Bitcoin is now probably within its last 100x, possibly last 10x, 10x to 100x. And we've had like something like tens of thousand X to get to this point. And so like I now think of Bitcoin as money, as hard money. If you were talking in the crypto sense, it's the equivalent of the US dollar without the fiat crap, but it's where you'll park your store of value. If you break down markets, markets happen on exchanges where people buy and sell. And there's two types of exchanges. One's for speculators, which trade on leverage. They usually trade these things called futures markets. They don't actually buy and sell the underlying asset. They just trade paper contracts, betting on the price going up and down, right? That's one kind of trader. And then you've got these markets that actually buy and sell the underlying. These are the spot exchanges. So the spot exchanges are a little bit more legitimate because this is where people come to buy and sell the asset. But even in those exchanges, people can buy, sell, and mess with the volume. And that stuff you can't really see because it's behind the wall of the exchange. They only give you price and volume data. But then there's this other thing, which is once you've bought your coins, you move it onto your self-custody wallet. A decent portion of investors move it into their wallet. Once they've done that, we see everything on the blockchain. And so one of the ways in which I measure demand and supply, and ultimately a lot of the things I do on chain is grappling with like, what is the real demand and supply between investors? It's really simple. I call it supply shock. It's how many coins can't you get if you want to buy versus the coins that you can get. So, you know, as the amount of coins grow that in the supply that aren't selling, I'm not selling, versus the people that are super speculative and they'll sell it at any price if they think the price is going to go down. So you run that ratio, and there's many ways you can go who's not selling versus selling, right? There's many views into that lens. And one of the lenses that Glassnode use, which is the provider of data I use mostly, they look at who are long-term holders based on their coins not moving for 5 months. So anyone who's held their coins for more than 5 months, those coins aren't moving. They haven't moved in 5 months. They're probably not going to move. You're not probably going to be able to buy those coins. Whereas any coin that's been circulating within the shorter time frame, there's a fair chance you can get those coins because they'll be moving between hands, you know. And so you run that ratio, and because it's a very long term, it takes 155 days for a coin to age into from short term to long term. It's a very smooth graph, and it's very macro. It's very sure, right? It's very like once a coin's reached 5 months of age, it's unlikely to change its behavior in a volatile way. And so when you run the supply shock on that, you'll see like the demand, essentially supply shock going up to these peaks. And those peaks coincide with mass accumulation by these long-term investors. And they also coincide with all the historical bottoms where a floor was put on the price by long-term investors because they keep accumulating, and anyone who's selling, they buy, and it keeps the price at the bottom. And eventually, once it dries out, no one's selling, the selling's exhausted, price moves up. And so we were in one of these accumulations. The last one ended at October last year. We had a decent spell of many months where we're at peak accumulation by these long-term holders, and then the price started to run up. It looks like we've got another at least a month or two to get to fully accumulating. Based on historically, it takes this amount of time, and then after that, with high probability, you can say, well, once they're accumulated, then the price can run up because all the coins have taken off the market. and then it takes months for that to run up, right? And so like you work out the time frames, it's like, man, we're going to blow past this year and we're going to keep running up. And every bull market in the history of Bitcoin tends to peter out around the Christmas time of the year following the halvening, which we had. So it's a fair chance that we'll not go into what we think, which is a traditional, Bitcoin bear market, which generally is a huge retrace of maybe 80% of its value. And it also takes about 9 months to a year to shake out. I don't think that's going to happen. And I think now, judging from the maturity of this market and the impacts of the different parts of the demand and supply from different parts of the ecosystem, we're breaking out of this 4-year cycle, which was really contingent on, the network being programmed to have its kind of newly mined coins every 4 years. Like that drop in the new coins being dumped onto the market is now quite insignificant. And I think that taking that all into account and what I'm seeing on chain, I don't think we're going to have like what we see these normal 4-year cycles again. I think I'm calling this the last cycle, and people think that's very somber and bearish, but no, I mean, like, this thing does a drunk walk of ups and downs, trending upwards as it finds its, adoption for indefinite amounts of time. These 4-year cycles are gone. That's what I think might be happening, which is, I think, it's a big revelation, because that's against the expectation of what the majority think. So we'll see if that plays out. But if you take into the context of this other on-chain data we have, it means that we're not going to have a market top, like a traditional cyclic market top, where everything goes into a mania phase and everything runs up, and then we have a blow off top and we come back down. We have this drunken walk. It's like the S&P 500. It just keeps wandering upwards. So it can be in the midline. And so the price could be anything between two models that I have, if they hold. Models are models, they sometimes break. So the upper bound is like 200,000 plus, right? And then there's lower bound, which is, I think it's below the current price by significant amounts.
Wow.
But like the answer to this is that it means that let's not look at the upper bound anymore. Like, we're looking at the wrong thing. Everyone asked that question because at the end of this year is the expectation that's the top of this bull market and the end of this bullish cycle. If you remove the idea that we're going to have an end of this bull market like all the other cycles, and we do this drunken wander, then this model doesn't really matter too much. And the idea of what is our price end of this year doesn't matter too much, because people basically want to know when are they going to sell their coins and go to cash and wait out another year till this thing bottoms. And it's just interesting. It just means maybe you shouldn't be selling. Maybe like we should be like equity investors who just invest and wait for this thing to keep going up without trying to time this market. It's obviously worth timing the market if you're going to lose 80% of your value over the next year. But, we've just seen a pullback of, 50% pullback. And then it's recovered over 2 months. Like I can see a lot of these things happening, but that's not a bear market for Bitcoin. Mm-hmm. A bear market for Bitcoin is 80% and 6 to 12 months.
I've no idea where we are, where we're going. It doesn't feel like 2013 and it doesn't feel like 2017. I just don't know where we are. Where the hell are we, Willy?
Well, that's what I've been telling everybody. This is unique. This bull run, 2020, 2021, we've never seen anything like it before. Structurally, it's completely different, right? So you can template all you like the price pattern from 2013. Oh, we're going to do a double pump, but the underlying investor activity is very, very different. And like, yeah, I mean, Bitcoin's maturing. It's getting very much larger players. We have institutions coming along. We've had a lot of speculators that are trading correlations, which we saw this last week as like this, for example, this last week, we've had nothing but buying by investors. They're buying on the exchanges, they're scooping it up, moving it off to cold storage, and you can look forensically at the blockchain and go, oh, okay, they're buying. And actually right now, which is really like not very common, is that you see the long-term investors. And when I say long-term, I mean, it's not really long-term. You don't know how long they'll hold those coins for, but these are the guys that keep accumulating. They buy, they seldom actually sell any of their coins. And then you've got these guys that are like what I call the swing traders, the medium-term guys that buy and sell. And those guys are buying as well. So everyone's buying right now. Meanwhile, the price is collapsing because you've got this new kind of speculative risk-off trading. People are like leverage trading and they're selling down. That's the only explanation for this price pullback, is that we had the Evergrande. How do you pronounce that? Evergrande? I just read.
I think it's Evergrande.
Evergrande. Okay, Evergrande scare. And also we had the Fed tapering kind of like notice. And you can see the S&P 500 starting to test support. And we went into this last weekend like that. And on the weekend trading, it started to look very weak and it sold off. And Bitcoin likewise started selling off. So it was just selling off on a correlation to the S&P 500, where nothing but spot buying. And so, that's one of the things that's interesting in this year, is that we've got different actors in the market, and they're all doing different things. And obviously, I look on chain, so I look at what medium long-term investors doing. To see what speculators doing, you really have to use derivatives data, and that's not quite as reliable. But yeah, so we've had this kind of mismatch, and I think a few people got very, very bearish, but there's really no cause to be super bearish. I think there's even a few people that are they still think we're in a bear market, but again, structurally on chain, what the real investors are doing is, we've never been in a bear market. Arguably, you might have been tipped into a bear market, but more like a little bit of a bear market within a greater macro setup. And so, yeah, that's the interesting thing. This cycle is not a cycle in my reckoning. This cycle is different. I'm like, it's not even a cycle. I don't think we're going to top, and we're going to have another 4-year sort of revolution where we have like a 1-year bear market. It's not looking like that at all.
I think that's healthy though, Willy.
Yeah, well, it was eventually going to happen, right? Eventually, the halvening will not be powerful enough, because, what is it? 1.6% inflation rate is what the miners are adding to the Bitcoin supply. Whether it's right now, whether it's 0.5% inflation rate, or is a 0.1% inflation rate, sooner or later, that's not going to mean anything. It's going to go to zero. At a certain point, it's going to break loose from the halvening cycle, and there's going to be other effects that impact it. And I think it's already happened. And even right now is like, the interesting thing is the mining has gotten so large and so like corporate that, we're starting to see numerous like mining operations that are publicly traded. And those guys now, many of them aren't selling because they are really, people investing in them for their Bitcoin. So they're not selling, they sell more equity to get more Bitcoin through their mining operations. So that sort of sell down's gone from some of the larger operators. So yeah, I think we're broken loose already. So it's like breaking, I'm not, there's a lot of people thinking, oh, wow, as the thing gets bigger and bigger and bigger, the cycles will lengthen. I'm not saying that either. I think that it's binary. We had this 4-year lock-in from the halvening. And then once we break free, then we're in correlations to macro, and macro cycle at around roughly 10 years. And I think because of that, this won't be a cycle. We're correlated to macro more than Bitcoin's internal halvening. So yeah, it's not like other cycles because A, we're not in a cycle, and B, underneath the structure of what the investors are doing is completely different than what we've ever seen before.
Well, I think breaking the cycle is actually bullish for Bitcoin. I would exchange a smaller top this year for not having a large drawdown that starts next year. I don't like the structure of a 4-year cycle. Look, if I knew it, understood it, could trade it, yeah, obviously it's great for gains. But if we want the market to mature and we want Bitcoin to be an asset that more people come in and use and don't fear the volatility, I would much rather have a more stable price than these 4-year cycles. So I think it's actually bullish for Bitcoin. And also, if the cycle is broken, there isn't going to be that big incentive for a massive sell-off come January, well, unless people have got to pay their taxes.
Yeah, I don't know. Because we've got other impacts, right? Like fourth quarter, well, that's well into the zone where we're all expecting ETFs to start coming in America, and fourth quarter is where we expect much more institutional in terms of corporate treasuries coming in. So these kind of demand and supply things meet, and maybe the buying is going to overwhelm it. Certainly is setting up that way structurally on chain, but I agree. Like, it's good to not have those 80% pullbacks over a year, because it wreaks havoc on all of Bitcoin's metrics, volatility, Sharpe ratio, risk, the risk undertaken, all that sort of stuff. It all just means that you can allocate more if the risk is less. So yeah, no, it's that's the great thing about this industry, is it keeps changing, and everything we've learned in the past does not necessarily apply into the future. Particularly these kind of fractals that of cycles. I think it's not going to work. This shorter time frames maybe, but not the larger ones, because I think we're in a different era. Like, all the metrics are broken as well. Like on chain, all those metrics that I used to use a year or even 1 to 2 years ago, I don't even look at them now. I think they're just so archaic. They're like Stone Age tools compared to the stuff we need to look at today. That's advancing as well. So yeah, it's a whole new ball game right now with these markets. Bitcoin is money. So I'm a maximalist on Bitcoin as money. I think it's one. And people often think I'm a maximalist, but I'm not. I think that there will be a lot of interesting technology that's going to come out of the space. And this is one of the problems if you're in Bitcoin, if you start talking about stuff that's outside of Bitcoin, you're considered promoting scams, which I don't think is the case in 2021. 2017, a lot of it was scams, and there's a lot of Ponzi's, and still is now, but there's some really interesting technologies out there, and the due diligence is fully available if you want to be the VC type. So let's face it, Bitcoin is not going to do a 10,000x from here. other than Bitcoin, fiat going to infinity in terms of money printing, it's not, in terms of real returns of things you can buy, maybe in a gold-based return, it's not going to do another 10,000x. We might get 100x, maybe 1,000x.
From a pure investment point of view, I would say first that drops of minus 50% and minus 80% will happen again, just because the volatility is in the market. It's a part of Bitcoin. No other market has this volatility. There are, we had a minus 50% drop with the mining ban thing a couple months ago. That was, well, not a really big event, but still a structural event, but minus 50%, right? So I think things like fear and greed in investors and people will be here to stay. Humans will not be different, and they will freaking out again when maybe the US bans it. Well, I don't think that's not going to happen, but something will happen. The introduction of the central bank digital currencies, the tightening news of know your customer, and you can't exchange it to fiat anymore, whatever, some bug, some big entities selling because they don't believe in it anymore. I don't know what the trigger will be, but there will be panic and people will freak out. Liquidations will come, and it will drop down. Yeah, I think that's part of the market. That's part of the charm as well of Bitcoin. So that will happen. That's the one thing. So greed and fear are here to stay. Minus 50%. We just had that. Minus 80% wouldn't surprise me. The second thing is, I reason from stores of value. So alternative investments. If I have a large sum of money, what are my alternatives? So it's equity, it's bond, and if you look at the commodity space or the non-financial asset space, it's gold, and it's real estate, basically diamonds maybe. But yeah, and so that's of course the stock to flow X model. I'm reasoning like an investor, like why would I put my money in real estate, or why in gold, or why in Bitcoin? And there are several aspects to what makes a store of value or money better than another one. And one is the visibility, another is portability, the classic fungibility, and scarcity. So I am not surprised at all that the real estate market is just so much bigger, larger than gold market. And I'm also not surprised that Bitcoin is a little smaller than the gold market. But as soon as Bitcoin, after the next halving, or really this halving, we should get really close to gold market cap. And after next halving, it would really surprise me if an asset that is recognized by the market as a store of value, that has, say, more than $1 trillion in value, if that store of value with bigger scarcity than gold would not at least be valued higher than gold. So somewhere between gold and real estate, 10 trillion and 100 trillion roughly. So in that sense, I think differently about the 4-year cycle. I think it's not, so the halving is important, not because of the miners selling, the sell pressure from because that's already neglectable. A big exchange is maybe bigger than some of the big miners, and add to that the ETFs and all the other sell pressure. So I think the selling pressure of the miner is not the thing. I think the fact that the scarcity is larger than gold is a fact, and investors notice that. They know it. Investors know that if gold can be made, if there's a new gold mine, of course that takes years to make it operational, but it can be found, a new source of gold, and then there will be a big supply. In fact, supply of gold has grown over the years, but with Bitcoin, for sure that that will never be more. So basically this is it. There's 19 or 18.8 million Bitcoins. and that approaches the 20 and then the 21 million. But this is it. So yeah, it is from a scarcity point of view and alternative investments like gold and real estate, that I think that the halving still will be an impulse for investors, because they will recognize and see Bitcoin for what it is, a really scarce asset and valuable at that. Then to conclude, I do think if the stock to flow of Bitcoin will be bigger than even real estate, so above 100, and that basically is the case after next halving, but and certainly after the halving in 2028, but let's say 2024, when we go over real estate, then it will be the most portable, most divisible, most fungible, and also the most scarce asset on the planet. I think investors will see that, and that combination will probably mean that people are going to see Bitcoin not as a store of value, but as in money, and that will trigger the hyper Bitcoinization. So you could also say that Willy and I are saying the same thing. The hyper Bitcoinization will be there eventually, but I think that will happen after the next halving and after Bitcoin has at least a stock to flow of 100 and maybe 200, but much bigger than real estate.
I think I agree with that. I mean, like, I think that we're looking at pretty much a 4-year from now to really, you know, have Bitcoin as a main contender on the world scene as a new money, or definitely a large macro store of value. Yeah, and you know, it's interesting because the next halving brings Bitcoin to the inflation rate below gold. It gets pretty scarce, and when I talk about the cycles, I think we agree on the destination where it's going. I think there's just different views on the shape of the chart. You know, whether or not we have the painful 1-year drawdown of 80%. And I think that's the difference of it is how, and you know, a lot of people have said, does it invalidate stock to flow? Well, of course it doesn't, because that's just based on the scarcity valuation, which doesn't change. It's just how does the price sort of meander in its shape, which is, you know, it's a very, you know, important point for people who want to time the market and want to sell the top, like, you know, I did, Plan B did for 50%.
It's interesting, Willy. It means we're back at the risk measure point, right? It's how do we and the options in there. So will there be a minus 50 or minus 80% drop again? It's a risk thing, basically. So that the end point is, I think, clear. The trend is clear. It will go up, but how will we get there? And will there be minus 80% drawdowns? That's the
exactly.
The next 2 months are very well known. I think we will end in the roughly at 98 at least this month already, which is huge. Nobody believes it. And then 135 in December at least. But yeah, I'm not interested in the top at all. So I don't know when it is. Yeah, when we get there, I know it, but I don't know where it is. I'm not interested in that, because I know it will be probably a 1 minute spike, right? I cannot trade it. I cannot sell or buy at that price level. I'm more interested in the general level where it hovers around, where it will. Yeah. So no, it's exactly like you say. So, but still, I think we'll go on in Q1. Because that's another thing you can measure from on chain. You can see the shortage that we're all talking about. How many Bitcoins are there? And you guys are really looking at coins at exchanges, and are they leaving exchanges to cold storage or coming at exchanges? But I'm looking at it at an on-chain level, and then you see that shortage building to a moment where it pops. We're still without telling what I'm looking at exactly, but we're still months away from that popping moment, and so I would say the top is at least 3 to 6 months, maybe longer away. I really don't think a crash is coming. I think we'll see a bull market that goes on for at least 6 months and bring us in the 100,000, 200,000. I wouldn't even be surprised with 500,000 Bitcoin in early 2022. But when we get to the sketchy part, when the FOMO transactions flow in, and you can detect those transactions, they are very distinct, then we have to all be a little bit more alert, right?
What milestones do you see as being the most impactful when we talk about the acceleration of hyper Bitcoinization?
Yeah, I think it's very similar. I mean, El Salvador was the first sovereign state to recognize it and even hold it in their treasury. And I think the next milestone is really to look at a wealthy, industrialized nation that holds it in their sovereign wealth. Because I think that's interesting, because then you got to sit at the table at the sovereign level who are going to bat for Bitcoin against like banning it or regulating it out. I think that's important. It'll add comfort to a lot of people coming in. And I think in terms of a metric, I think the next milestone really is the distribution. To have that distribution be less concentrated and start to reflect something akin to what we see within the fiat world, and then further distribute. I think that's one of the most important things. Everything within Bitcoin is very reliant on decentralization, and decentralization of the wealth base is just as important. Right. I think that would be a kind of non-visible political milestone. It's non-political milestone. It's just a metric where we just cross, and like now it's more spread than fiat. And then, hopefully it continues to spread and we have a better distribution of wealth in the world. I mean, that's my hope. Let's see how it works. Currently it's more just concentrated, but I'm seeing every year that the whales sail down. And eventually we'll have succession. The original rich whales will eventually pass on their inheritance to the next generation. And so, I think we'll get there. Plan B.
Yeah, predicting is difficult, but predicting far in the future is even more difficult. One thing I learned is that even 2 years into the future is so difficult. If you look back 2 years, right? If you look back at the end of 2019, I would have never predicted COVID or the whole thing around that. That's not even 2 years ago. So I think what will happen and what will be the big accelerator for Bitcoin and a lot more things with it is something we don't know yet. Something that will pop up next month, tomorrow, 6 months from now, that will alter the entire scene. It could be climate change. It could be a cyber security leak thingy scenario with attacks, and then all the banks, all the money is gone. And of course, Bitcoin is the only network that cannot be hacked and attacked. It's something we cannot even think of right now that will trigger that hyper Bitcoinization.
Do you think about tail risks?
Yeah, tail risks.
Like I think it's a tail risk that Bitcoin doesn't succeed. I think it's more like, well, it's already at a level of success where it's going to get to the next level.
Yeah.
But the tail risk is if something breaks and then the next day it's gone.
Yeah. The tail risk. Yeah, there is tail risk. But I agree with you. How I see it is Bitcoin is the better money. It's the better store of value. It's mathematically, thermodynamically, it's the best there is. So it must succeed. It has to succeed. It can be stalled. It can be sabotaged by political things, by military things, but it is physically or thermodynamically, it's mathematically, it's the best thing there is. So it would be like saying keep saying that the earth is flat while it is round. One day you cannot hold that ball under the water. It has to pop up. So I fully agree. Bitcoin will go higher and higher, and there is still risk, but I think it's.
But we can't see it by definition, right?
Exactly. Yeah.
Yeah, what's the saying that the biggest risks are the ones you don't know, right?
Yeah.
That's it. And that's the same is true for the biggest opportunities. So I think the next trigger, it will pop up. One day we'll wake up and then there it is. Changes the whole world.
Historically, what have been kind of the behaviors or investor behaviors on chain that have resembled a bear market and a bull market, and kind of break down how you guys view the anatomy of that whole process?
Yeah, to be honest, I view the on-chain, I think the on-chain analysis, for me at least, is most valuable in identifying tops and bottoms. So identifying FOMO transactions, if you will, at around the all-time high, and panic liquidation kind of reactions or transactions in a bear market, the bottom of a bear market. So, and you know it when you get there, right? So I could not say what the top of the market will be right now, because we're not in a FOMO situation. So at least I know we're not in a FOMO situation. So it is not the top, but I don't know when the top is, and that's that's of course the difference with the stock to flow, more fundamental model that has gold data and stuff in there, that you can very, very roughly say something about the level. Yeah, you could expect the next Bitcoin price level to be, but on chain, so at least I can say we're not in a bear market right now, and we're not at the FOMO end of the bull market, so we must be somewhere in between.
What milestones do you see as being the most impactful when we talk about the acceleration of hyper Bitcoinization?
I mean, El Salvador is the first sovereign state to recognize it and even hold it in their treasury. And I think the next milestone is really to look at a wealthy, industrialized nation that holds it in their sovereign wealth. That's interesting, because then you got to sit at the table at the sovereign level who are going to bat for Bitcoin against like banning it or regulating it out. I think that's important. It'll add comfort to a lot of people coming in. I think in terms of a metric, the next milestone really is the distribution. To have that distribution be less concentrated and start to reflect something akin to what we see within the fiat world, and then further distribute. I think that's one of the most important things. Everything within Bitcoin is very reliant on decentralization, and decentralization of the wealth base is just as important. That would be a kind of non-visible political milestone. It's non-political milestone. It's just a metric where we just cross, and like now it's more spread than fiat, and then hopefully it continues to spread and we have a better distribution of wealth in the world. That's my hope. Let's see how it works. Currently it's more just concentrated, but I'm seeing every year that the whales sail down, and eventually we'll have succession. The original rich whales will eventually pass on their inheritance to the next generation. And so, I think we'll get there. Plan B.
Predicting is difficult, but predicting far in the future is even more difficult. One thing I learned is that even 2 years into the future is so difficult. If you look back 2 years, right? If you look back at the end of 2019, I would have never predicted COVID or the whole thing around that. That's not even 2 years ago. What will happen and what will be the big accelerator for Bitcoin and a lot more things with it is something we don't know yet. Something that will pop up next month, tomorrow, 6 months from now, that will alter the entire scene. It could be climate change. It could be a cyber security leak scenario with attacks, and then all the banks, all the money is gone. And of course, Bitcoin is the only network that cannot be hacked and attacked. It's something we cannot even think of right now that will trigger that hyper Bitcoinization.
Do you think about tail risks?
Yeah, tail risk.
Like I think it's a tail risk that Bitcoin doesn't succeed. I think it's more like it's already at a level of success where it's going to get to the next level. But the tail risk is if something breaks and then the next day it's gone.
Yeah. The tail risk. Yeah, that there is still risk. But I agree with you. How I see it is Bitcoin is the better money. It's the better store of value. It's mathematically, thermodynamically, it's the best there is. So it must succeed. It has to succeed. It can be stalled. It can be sabotaged by political things, by military things. But it is physically or thermodynamically, it's mathematically, it's the best thing there is. So it would be like saying keep saying that the Earth is flat while it is round. You cannot hold that ball under the water. It has to pop up. So I fully agree. Bitcoin will go higher and higher, and there is still risk.
We can't see it by definition, right?
Exactly. Yeah.
Yeah, what's the saying that the biggest risks are the ones you don't know, right?
Yeah.
That's it. And that's the same is true for the biggest opportunities. So I think the next trigger, it will pop up. One day we'll wake up and then there it is. Changes the whole world.
Yeah, I think I agree with that. I mean, like, I think that we're looking at pretty much a 4-year from now to really, have Bitcoin as a main contender on the world scene as a new money, or definitely a large macro store of value. It's interesting because the next halving brings Bitcoin to the inflation rate below gold. It gets pretty scarce. Yeah, one more. I think the when I talk about the cycles, I think we agree on the destination where it's going. I think there's just different views on the shape of the chart. Whether or not we have the painful 1-year drawdown of 80%. And I think that's the difference of it is how, and a lot of people have said, does it invalidate stock to flow? Well, of course it doesn't, because that's just based on the scarcity valuation, which doesn't change. It's just how does the price sort of meander in its shape, which is, it's a very important point for people who want to time the market and want to sell the top, I did, Plan B did for 50%. And
it's interesting, Willy. It means we're back at the risk measure point, right? It's how do we and the options in there. So will there be a minus 50 or minus 80% drop again? It's a risk thing, basically. So that the endpoint is, I think, clear. It will. The trend is clear. It will go up, but how will we get there? And will there be minus 80% drawdowns? That's the
exactly. It's all about the risk. It's all the downside and how much you're willing to withstand. And I think there's more than that. It's there's times when I'm trading and the trade is going against me, and I know it's going to swing back because I've got the fundamental data that's very, very strong. And I'm like, well, it's going to swing back, but I will sell down my position to mitigate the downside risk. And the reason I do that is not because I don't believe I'm going to win this trade. The reason I do that is because I know ahead of time, if it goes below a certain level, I won't be able to stomach that level of downside whilst keeping a clear head. So I'm actually proactively, I know my risk tolerance pretty well, having traded for so long, and I'm going to take some money off the table, downsize the risk so that if it hits lower, I'm really going to make a less emotional, I'm going to make a decision more rationally rather than out of fear. It's like that, I think it's not only understanding risk, but it is really much understanding how your behavior is going to happen. How is it going to play out with the road ahead, which is really important.
And one thing I'll be looking at like a hawk is the option markets that we talked about before, because the option markets is a risk market, is a volatility market that's basically trading volatility as an asset. And I pulled up the numbers right now for September options, September next year. So a year from now, almost, the implied volatility is still above a 90%, between 90 and 100% implied volatility. And I guess if or when the markets, because both of us can be right? If the super cycle, the hyper Bitcoinization sets in, and the market is convinced it will go without those minus 50% or 80% drops, then that implied volatility in the option markets will be the first signal, the very first signal, because they are directly trading that as an asset, where the implied volatilities will drop. That's what I think. And right now they're at 90, 100. So that's really a.
You said that the 50-60 range is actually pretty much a nice little base that we have going, that you don't see the price dipping below that. Why do you say that?
I'd say that there's a lot of price discovery, like an enormous amount of Bitcoin has moved between investors over this $50,000 to $60,000 range. So, if you look at the supply, it's a huge amount of coins that moved. So, when coins move between investors, someone's buying, right? And if you're buying at a given price, you think it's a fair value. And when a whole lot of the supply is being moved around and being bought at that range, then the mindset of investors is that that's a valid price. If it shoots up really high and only a small amount of the coins trade, it's not very valid, because not many people think that's a fair price. They're not buying. We had a huge amount of coins move, and so what I'm saying is that in the $50,000 to $60,000 ranges, it's $1 trillion of market cap for Bitcoin. So it's a $1 trillion asset class, and that's very much validated, cemented. I'm not saying it'll ever, never go below, but it's very unlikely that it'll drop below this sort of $50,000, $60,000 range and be sustained, given the amount of price discovery we had. So it's formed a really good base for it to move further up and see what the price discovery is higher up. But if it ever comes back down, this is an area that we'll revisit and will be pretty valid, well supported. So I don't really think Bitcoin will drop below the $1 trillion mark in the future, not for sustained periods of time. It may dip very, very quickly, but I think that we're now, going to move up, and that's significant for Bitcoin because, all macro asset buckets that people store value in, whether it's real estate, equities, bonds, whatever, it's all units of trillions of dollars. So Bitcoin's kind of like this little baby that's just broken into that club, and also given the adoption of it, which is going exponential, time's running out for it to drop below this zone as more and more people enter.
So what else are you seeing on chain? I mean, I'm reading a lot about how the Bitcoins are not really moving hands, right? So people are holding.
Yeah, there's a lot of more and more of the supply that has been moved to what we call illiquid holders. That are these people that have a history of accumulating coins with very little selling. So that trend's continued. Notably, a lot of coins are moved off the exchanges. So people are buying the coins, scooping them up, and like the inventory on exchanges where they usually traded or sold is depleting. So that's another good sign. We've had that. It's unprecedented, really. It's been running like that for the good, it fluctuates, but for the most part, it's been depleting for a year, and that's a new pattern. So if you were to look at Bitcoin over the last 12 years, it started off with more and more coins flowing into the exchanges from those early guys that, mined it from as early as 2009, 2010 onwards, and they were selling in. And so the supply started to fill the exchanges, and it was traded. And, around the COVID crash, like a year and a half ago, I guess, there was a sea change of activity, and that behavior started reversing, and so a lot of the coins started moving away from the exchanges and being locked up into cold storage under people that are hodling. So that's been going for a very, very long time, and it's, if you look at the long arc of 12 and a half years, this last year's had this complete behavioral change. So that's a very bullish sign.